But let's move on to talk about how we can wind down 2019 and prepare for a new decade to begin. We have several prominent traders that are looking ahead to 2020's January effect. And what's that, you might ask? It's a rise in stocks in early January that are bought on by the buying of securities sold in December. And usually that happens for tax purposes. So if you want to get ahead of the game, our next guest is here with some tips and tricks on how to help grow your investment portfolio as we approach the new year. T3 trading chief strategist Scott Redler joins us now. Normally we see you at the New York Stock Exchange, so this is a nice little treat that you've come into the studio. So let's talk about the January effect that you actually think highly of and historically has done quite well. Why is that?
Well, it's a cute setup that traders look for each year. It's different each year depending on what the market's been doing. So the S&P is up, I think, 26, 27%. So there's not a lot of sectors being down. So why the January effect works is a lot of these sectors have been being down. Investors, hedge funds, everyone wants to take a loss there. So they just start selling it indiscriminately. They might own it. They don't care if they're where it's being sold. They're just like, get this off my books. I need some losses. I need to counteract against my gains. So they sell it. So there's a lot of pressure there. But once you get into like November, the beginning of December, some of the selling stops, the pressure eases. And then traders like me who want to look at different sectors that might be an opportunity start accumulating it, because come January 1st, they can't sell it for a loss. And then come mid-January, they might even buy it back higher, not caring because they just sold it. They didn't want it to be shown. And then that adds buying pressure versus selling pressure.
We have a range of investors that watch the show. So for somebody that's maybe a little bit newer to the game, how would they be able to find out which sectors have been really pressured, sold off to your point, so that they can take advantage of this rally in January? Is there any particular areas that you're suggesting right now?
Yes, I'm looking at the cannabis sector. Some people call it the wellness sector. Some people call it the marijuana.
What do you call it?
I call it the wellness sector.
The wellness, okay. The PC.
I'm glass half full.
Okay.
And this sector's been battered and bruised. All the hot money came here to start the year. A lot of these stocks were, you could have bought them high and sold them higher for the past 9 months.
So many puns right now, right?
You've been buying them lower and getting upset. So I may be using those products. No, anyway.
Is that what happens to you? No,
no.
That's a joke.
I like an IPA here and there. But as far as the sector, there are a lot of stocks that have been being down. So what I want to do is I want to talk about the ETF for the wellness sector. The symbols are MJ.
MJ.
A lot of individual investors don't want individual stock. They just don't want the risk of it, because sometimes one name will have extra headlines and not go up with the sector. So if an investor wants to get some focus on it, they could buy the MJ, which I think is down like 35% for the year.
Yeah, when you sent it to me, about 32%, yeah.
So I think it's trading somewhere around 17-ish. So I do think that from 35 down to 17, I think it was even as high as 45 in the past year. I think you could accumulate it somewhere near.
It's $16.95, but you just talked about how low it's fallen. If we're talking about the wellness market as a whole, you had regulatory issues in Canada. The black market is still thriving here in the United States, so isn't that worrisome for you?
Well, it was worrisome if you bought it 6 months ago and got put underwater. At this point, I think we're going to have glass half full with a bit of a rise, because, again, you have no more mechanical selling. Plus, people are starting to talk about wellness 2.0, cannabis 2.0. You'll also have, I think, more states voting on whether it's going to be recreational. I think there's 10 or 11 states now in the U.S. I have a feeling it's going to double that. So sentiment's going to lift. So right now I'm trying to be cute. I'm trying to buy stock in the hole. I call this like a treasures for trash trade, where you have one group that's in someone's trash bin. If you didn't buy it and get caught in it, you could buy it here. And it's not for everyone, but I think if you go with the ETF and a few select names, you could set yourself up for nice gains for January into February.
Okay, so wellness sector, what about beaten down IPOs? How should we be taking advantage of that going into 2020?
Well, it's the same situation. You have these IPOs that were mispriced. You had the investment bankers put them way too high with crazy valuations. So anyone who bought them in the past multiple months is underwater. So like, hey, you know what? I need to take some losses because everything else is up, like my Apple, like my Tesla, like my Microsoft. So they're selling it just because they need losses. So at this point, I have two names that I'm looking at. I'm looking at Beyond Beef.
Beyond Meat, yeah.
I was kidding. The alternative. All right, this stock was north of 200. At this point, I think it's trading around 77.
Yeah, but it needs to prove it's going to be profitable, right, going forward with that? And then Uber, look at it. It's really hit some lows over the past 3 months.
Well, again, we were talking about a trade. We're not talking about a fundamental thesis. And beyond beef, I always keep calling it the wrong name. But anyway, BYND, I think around 77, you can get some type of bounce up towards 100. That's a nice percentage gain. I think traders that want defined risk, they could do a call spread. Uber is getting a lot of negative press. The founder, he's almost 90% out of the stock, so that's been selling pressure. Besides tax law selling pressure, so I think right around here at $30, I think Uber is a great trade. Not to go back to where it came out with the new issue, but at 10, 20% within the next 30 days, short term.
Okay.
These are cash flow opportunities for the professional trader and for the active investor that pays attention.
And pays attention to the claiming countdown because they're getting these tips. Thank you, Scott Redler, for joining us in the studio. He's normally at the New York Stock Exchange.